Going on, everyone? Welcome to my channel. We're going to do another trade recap, going over a couple of trades that I took, a couple of setups that we took together as a Discord community. It's going to be a very good video with some insightful information so you could all understand my thought process and my strategy a little deeper. Before we do begin, all I could ask is if you do enjoy my videos, you do learn something, be sure to hit that subscribe button. And if you want a very good trading resource, I'm going to link my Instagram in the description below. I post daily trading recaps along with very good trading tips and tricks. It's a very good resource and you're definitely missing out if you aren't following it. Without further ado, let's get right into the recap. To get more context from Monday's action, let's go over the pre-market plan that I post every single day in my Discord room. So the S&P 500 was very close to all-time highs. We were trading around 40 points away from it right before the open. We had supply above at 3957. We also had supply at 3966 and 3974 going up to all-time highs. This was a congested area that we were putting lower highs in on a daily chart, along with a zone which we rallied inside of going into the close on Friday. We tagged 3957. We also tagged 3966 Friday, and we're selling off in the overnight session. Overnight session, we pulled back, and for the future traders that trade overnight, perfect entry down here at 3929 demand. This was a zone that we were watching if price pulled back into. So now that we have demand below and supply above, the key is waiting for the reactions at these levels. I always say this, but supply and demand zones are the areas where I want to be a participant in the market. And I let price and volume to tell me when to put a trade on and when to be an active participant. So these are just guidelines of I know where the participation between buyers and sellers has been an imbalance one time in the past. So if we get that same reaction, the zone is going to react. If we don't get the same reaction, most likely we're going to see some type of continuation. So if I go to an intraday chart, as you know, I'm a day trader and a scalper. We go to this day, the first 5 minutes of the market open, very strong rally inside of this supply zone at 3957, rallied right into it, and a beautiful sell-off from that zone. If you go to a 1 minute chart, we rallied right into it. As soon as we rallied into it, we sold off and had a very strong move to the downside. So about after 10 o'clock or so, that's when everybody was starting to take profit just because we crashed below VWAP and it started getting a little choppy in this area. I know a lot of members did take this trade short here. I did not. I was letting the trade get a little more room to breathe. It was just a quick move up and then a quick move down, but very good trade off of that supply and balance. After 10 o'clock to about 11:15, if you are watching the volatility, if you are watching the candles develop, now, everybody looks at a candle and they look for different patterns or they look at different setups based off of the candles. Nothing wrong with that. I look at candles as a representation of how price is printing, how price is moving. Is there momentum? Is there volatility? Are our buyers bringing it up? Are sellers bringing it down? You know, are there a lot of wicks? Just a bunch of different factors that I look through on a daily basis. And this to me right here is low volume, lot of no momentum, and there's really no clear direction. And when I see this, obviously sellers are in control. We're making lower highs, also making lower lows. But this is telling me, you know, stay away from this market right now, especially that we're selling off and we have demand about 3 points lower. So if we get a quick pull down with heavy volume, I'm going to take the trade long into 3929. But at this point, you know, don't try to catch a falling knife. Don't try to force trades. And on certain stocks, we're not going to see a lot of follow through just because of how choppy the market is. So wait for a reaction. Usually after a choppy period, we get some continuation and we get some follow through. So it took about until 11:15, 11:30 where we started moving up and we started trading higher after moving away from this choppy range, came above VWAP. And if we go to a 5 minute chart, we came up, and then on a 30-minute chart, we saw a very large, go to a 30 up here in the top left. Keep in mind, we saw a very large upper wick inside of supply. And what that tells me is the selling pressure is very strong. And if we want to catch a reversal, we either have to wait or speculate that new demand is going to form, or we take a pullback long into demand. So this drop right here, if we go back to the 5 minute chart and that rally, it was a very clean move to the upside. Price action was very clean. And then we got this pullback down. But because of this move up and this pullback and then the continuation up, it almost looks like a roller coaster, or some people call it a cup and handle. It kind of looks like a U, and then came back up and rallied. This to me creates new demand. So at one point I was speculating that new demand was going to form in this area as long as we got that move up. And we did reject that supply earlier. So as soon as we got this push up to test the double top, and then I saw us consolidating at that supply zone, if we were to look at a 1 minute chart, I took this trade long at 12.44, right at this candle right here, inside of the supply zone. Pulled back briefly, but nothing to panic, nothing to worry about. Like I said, what I like seeing is a lot of these upper wicks. I call it poor structure. It's where we come up, sellers really are very responsive to price. So if we come back up and test that wick again, most likely either A, we're going to double top and we're going to reject that supply for a nice sell-off, or B, we're going to come up, we're going to break above the high, we're either going to create new demand, or we're going to rally into the next supply zone. So there's multiple different scenarios you have to think about. And this is why trading is so complicated, and a lot of people fail is because they can't come up with these scenarios on a blink of an eye, and they can't really think outside of the box. They trade so stiff, they trade like statues. You have to do this type of analysis as the market's trading, or else, like I said, if the market's throwing rocks at you, you're just gonna sit there and you're gonna take those rocks to the face. You have to be able to catch them, throw them back, and take trades off of it. That makes sense. So we rallied, double topped. I wasn't really feeling a double top just because this supply rejected once, twice. It very could have sold off and double topped for a nice short setup, but I was speculating that new demand was going to form from this choppy action and from this move up and the pullback. Like I said, that little U pattern. So I was speculating that new demand formed, and with speculations, I take a little lighter size because it's not confirmed yet. It's just speculating, and it's more of a gamble. I don't want to call it a gamble. It's more of a protected risk. Then the market started rallying, and we're just slicing through the supply like butter. It's almost like the sellers are not even there. And I was pretty confident, and that did validate that demand in that area. Then we started rallying up, and boom, right from the pre-market plan, that 396675 is where I sold full position. Like I said in my past video, and like I've been telling members in the Discord room, my first scales have been awesome. I've been selling pretty much near the top, and I usually let my trade have a couple contracts room to breathe. But at one point, as soon as we came into the supply zone, I sold full position. Then the next 5-10 minutes, I was going to make it a risk-free trade, almost like because I protected myself. But I sold right away, full contract, right after 5 minutes of that 3966 zone. And it was a good sell. As soon as we pulled back, then we rallied. And then at this point, the market was just playing games. It was lacking momentum. It was choppy. And this is where FOMO kicks in. This is where you have to be patient. This is where you have to ignore all your emotions. Let's just say you missed this run up and you're only looking to the right of the chart when it's choppy like this. Because you look back on the chart, you're going to be like, wow, I missed that rally. This had a beautiful 2 different setups. Short at supply, long here, speculating demand is going to form. Now we're 10 points away from all-time highs. Let me take it long. We're probably going to test it today. You probably most likely would have been chopped out, especially if you traded today's expiration, or you would have got frustrated just the way price was trading because it lacked follow-through and lacked momentum. And I did take 134% on those SPY calls. I posted this on my Instagram. Be sure to follow it. Next setup is on ticker symbol X. Normally don't watch this, but we charted this on our live charting session last night that I did with members. We're watching if the 2239 demand can hold. The first 3 minutes of the market open, this is a 1-minute chart. We sold off right into that demand zone and started rallying. As soon as we saw momentum starting coming in, I took shares long. I did not trade the options on this at 9:33, and I sold full position as soon as we came into the supply zone with heavy volume. Hindsight, obviously I could look what happened after the chart and say, I should have held this, but I stuck to the plan. I took it long around 22.72 and took full profit around 23.80 as soon as we came into the supply zone. Very good trade. We had more room higher. We did reject a resistance point On a weekly chart at 24.71, sold off and then rallied, broke the high above resistance, and in the afternoon it was kind of choppy. Now on Tuesday, Tesla had the same plan. We were watching for a break out of the $600.55 demand zone, and if we could break above the downtrend above 615 to 620, then we could see 637 and higher supply. So overnight we were at this zone. Market opened up, and it was support from yesterday as well, along with the $600 whole psychological number. I saw tons and tons of people all over talking about playing puts on the $600 break. So I love when I see this, and especially that we're coming into a demand zone when majority of retail is bearish. It's telling me reversal. The chances of one happening is significantly higher if majority of retail are playing puts on a $600 break inside of this or any demand zone. So I saw that price got to 600, broke below. We did sell off about 9 points from 600, but by the time majority of retail got in, a lot of people either will chase, they wait to enter because they're hesitant to play in puts, or whatever the case may be. Majority of them probably bought around the 595, 593 area and didn't get enough juice out. Volume was pretty heavy at the open, and everybody's short here inside of demand zone. All it takes is for a quick push up. They'll stop people out, they'll cover shorts, and it'll just help fuel another move higher. So we did bounce out of this demand zone, but let's just say you didn't have demand here and you were watching for a $600 break. The first 20 minutes, 15 minutes of the market opened, it did look super bearish. But as soon as you put my box on there and you know we're in a green buy imbalance, there's no reason, zero reason to be short bias. I don't care if the greatest trade in the world is saying to short this, because we know how powerful these imbalances are. Then we managed to rally out of here, and we put this high in at the open around 606. And this downtrend line was from a while ago. We were just continuing to test it, extended it forward, and I really wanted to break above the highs yesterday for a continuous move to the upside. So as soon as we came back above VWAP, we bid it above 600. This was telling me now shorts are extremely under the water, and when people have pain, that's when you're going to have the most game. Trading is a zero-sum game. You're taking away from the impatient traders. You're taking away from people that are stopping out. And like I said, this is just going to fuel a further move higher. So the market pulled back and we were forming a cup and handle pattern. I loved how much VWAP was pointing up. I loved how this pullback was holding VWAP. It was hugging it like a blanket. And this was a cup and handle. And like I said earlier in the wick on the S&P 500, same thing. When we come up, we test it. I see more often than not that we do break it. And then this thing started rallying, coming up into the 615 to 620 area, which was also confluent with the highs of yesterday. So expect minor resistance there. Everybody assumes and becomes quick to assume that, just because we're stalling out at a resistance or at a support level, that the market's going to reverse, it's going to turn. But what's going to happen here is you have a force of sellers, and for price to continue higher, we either have to base out or we have to form new demand and create interest with increasing volume to the upside to take away that wall of sellers. So we came to 615, we bull flagged, we consolidated, held above 610, finally broke above that trend line, and then extremely strong move. Volume is there to support it. Volume is very, very convincing, and this was an extremely strong move. And again, the market was selling off. No real reason to panic, because at one point it did look like a falling wedge. We were making lower lows. And then as soon as 1 o'clock, 2 o'clock happens, volume started dying out, yet Tesla was still holding. We came up and end the day, it hit our full target at 637 from our pre-market plan. So very, very nice trade on this. And the S&P 500 today, plan very simple. We had supply at 3957. We were rejecting overnight. We had a lot of bearish signals leading to the downside. So dips must get bought to be bullish. And we have the 3944 demand zone, and a little lower we had 3929 and 3923 from yesterday. So if we were below it, further downside. To the upside, we had to get above 3957 to 3966. So the market did open up, and this is a very important lesson. This will separate the best traders to the, I don't want to call them worst traders, but to the most impatient traders and to the ones that force setups. If you force setups and you don't let the market come to you, or you don't listen to what the market is telling you, you are going to force trades, you're going to have FOMO, and you're going to take trades that personally I would have never put on, and you're going to take trades that are a guaranteed loss just depending on the market context and the conditions. So yes, we sold off into demand, but if you were watching price action, I was telling members this is chop, best to avoid it. We were consolidating sideways. There was no momentum. There was no volatility. Yes, we bounced out of demand, but there really was not clean price action. And when I can't get a clear understanding of the story the market's reading to me, I just avoid it. I don't take any trades, because that's when you're going to start forcing stuff. And that's when you're going to, like I said, start taking irrelevant trades. At the same time, majority of the equities we trade, super choppy, no follow through, no movement. Boeing, super flat. Microsoft, super flat. Apple, super flat. The NASDAQ, it's only about finding stocks that are showing relative strength, whether it be to the upside or to the downside on a choppy market, that it's acceptable to trade. The Dow, super choppy as well. So on days like this, you have to be very limited, and it's very important for you to preserve your mental capital. Mental capital on days like this is probably more important than your physical capital, because this is going to drain you if you're looking for the next best setup. And if you are in a trade with no follow through, you're going to want to pull your hair out, because the market's just not going to move and your contracts are going to get destroyed. So what was this, 12, this was about 2:30, we moved in a 14-point range. Meanwhile, overnight we moved in a 20-point range in a 30-minute period or an hour period. So very slow action. It wasn't until about 3 o'clock where we did rally finally into that 3957 zone. So if you were scalping this on momentum to the upside with high volume, we did double top and we did sell off for about 20 points. And 20 points end of day would have been a very nice trade on this. So congrats to everybody who did take that in the chat room. Nice setup. We came back into this demand zone. We defended this 3938, 3942 zone, and then we rallied pretty strong, and now we're just not doing anything as we speak. But our zones worked out. It's how the market moves. We move from imbalance to imbalance. If the market's choppy, it's best to just preserve your capital for another day. So I hope this video helped. Hope it wasn't too long, me rambling. If you want to learn more, check out the website in the description. I do offer a very in-depth and educational course that comes with access to this Discord room. Also, be sure to like this video if you learned something, follow me on Instagram, and subscribe to my channel. Other than that, talk to you all soon. Later.